Okay, good afternoon. Welcome to the weekly take on the market. Today is Saturday, actually. I was a bit under the weather and lost my voice yesterday, so was unable to do the video. So I thought I would record it today. This will be fairly quick, I guess, because it's a Saturday, but I'll try to set us up for the new year. Today is the 4th, January 4th, and the start of the new year. My name is Scott St. Clair. I'll be your host. I am the manager of the premium product group here at Investors Business Daily. I'm not licensed, can't tell you what to buy, what to sell, what to hold. Do your own research. We try to stay in our circle of competence here at IBD: research, education. Okay, so the drill is the same. We'll talk about the indices. We'll talk about the industry groups, some stocks to watch, and then the quote of the week. So let's start with, well, I guess, do I want to start with the indices, or I want to start with the, let's start with the indices. And here's the NASDAQ. So the first day of the trading year was this day. Actually, you had a little bit of a distribution day. The volume, I think the volume was up slightly, right on the 50-day, but then yesterday was a very powerful day. It's until, I think you're just kind of in buy mode until the market really breaks, till we undercut. Like we did undercut this low, but you see how it just can't stay down. So the undercuts of lows are head fakes until they're not. So that's how I treat them until they're not. One day they'll not be, and you'll want to adjust quickly and fast to that occurrence. But as of now, it just seems like every undercut is there's a buy the dip mentality, and it will exist until it doesn't. I don't have the slightest when that will end. So the market looks fine. NASDAQ, it probably wants to push to new highs and just really just kind of test the waters. It's like a Groundhog Day. Is peek its head into new high and see if it's safe to run, so to speak. The S&P. Same thing, closed right on the 50 days. Actually, a tiny bit weaker. And the NASDAQ is starting to, you can see the relative strength is still not quite there, but it's getting a tiny bit better versus the S&P. So I'd like to see that a little bit better. I know on Friday was a strong day for like NVIDIA, and although Tesla kind of had a poor Thursday, had a good Friday. So maybe this relative strength will start to improve. The Dow is the fly in the ointment, the weak sister, below the 50-day, relative strength poor. So when I feel like shorting, I tend to short the Dow. That's kind of where I've been the last week or two, whether that's index futures or inverse ETF in my IRAs. If I want some kind of hedge or exposure to the downside in my retirement accounts, I have to do it in levered ETFs. There's no other way that I'm aware of. I guess there are some levered ETF downside individual stocks, like Apple has one, I think NVIDIA has one, Tesla has one, but they're kind of flawed products when they're levered. So this looks fairly poor, and if the markets make a new high, I just a hard time seeing the Dow making a new high in that same regard. So it's like a 1-horse race, a 1.5 horse race. The Dow has a sprained ankle. The world markets have broken legs, and you have the NASDAQ and the S&P just neck and neck, and it's been that way for a long time. But it's really showing now. Like I go through a bunch of world ETFs, and really surprised how poor the world ETF markets look. Like even like something like India, which was doing so well. I never realized that I just don't trade it, but gosh, it's down 24%. Now I do watch China a little bit because it's on everybody's tip of their tongue. But this is down 26%, 52-week high. But where is it from? What's that? Almost 100. It is over 100. So it's down 70% from that high. So there's just nowhere to go except U.S. and U.S. big, and there are a handful of areas that are performing. There's some pockets of speculation, whether it's robots or quantum computing or EVs, or that'll never change, I don't think. But overall, it's the Nvidias, the Teslas, of the world are really holding the market up. And as a market veteran, admittedly, that bothers me, and it kind of keeps me from getting really fully into the market. But I can live with that. I'm okay with that. I don't have to beat the indexes week by week, month by month, year by year. I'm just kind of running my own race. I like to know where it is, obviously, because it's important to know why I'm doing this. Otherwise, just put the money in an ETF and maybe use some kind of moving average crossover study to protect myself. So I'm more into like risk adjusted returns. All right. So S&P, NASDAQ, fine. I don't know where IBD is. I think there was talk of them reducing exposure. I don't know if they did on Thursday and then increasing it back on Friday. I don't know if they did that. Like I said, I was a little bit on the weather, so I wasn't really paying too much attention. Let's go to, I know this isn't really industry related, but here's Bitcoin holding up pretty well. A couple of, shots across the bow. Those would have been tough, but holding up pretty well. And on the weekly, I bet it looks like it's bouncing off the 10-week. Yeah. In the weekly, it looks textbook right there. Gold. I haven't looked at gold in a while. It's kind of in no man's land. Nothing wrong with that, hanging in there. So, and I don't know, like UUP. I do hear some chit chat on the, this must not be a good proxy. Maybe there was a dividend or something, but I do hear some chit chat about how strong the dollar is, like strong as it's been in ages. So here's FXY. This is Japanese yen, and in more than half. I don't know what the ticker is. It FXE for the euro. So 158 to 95, down about 45% ish or something like that. So, but I don't know what that means. I don't know how I could trade that. But I do see that a little bit more and more coming across my Twitter feed, kind of the sentiment. And I like to use that for sentiment. So I think that the Twitter feed gives you kind of a good idea on when there are too many boats on one side of the market or the other. Options activity is just stratospheric. Look at the volume, the daily volume of options, how much it's changed the game in the last 40 years for sure. But even in the last 5-6 years, I was reading that there was some type of massive option contract on Tesla on Friday. And forgive me if I get this wrong, but you'll get the gist of it. If you're an option dealer, you're providing liquidity. If somebody comes to you and buys, let's say $1 million worth of Tesla calls, well, you're basically short that, right? You're short that. So you're short Tesla. So a lot of times what they do is, I guess they could go to the option market as well, but I guess they go into the market and buy the stock. And it's just relentless option call buying in some of these names. Like when you look at the intraday chart, it's like they never tick down. They just tick higher, higher, higher. And it's just kind of unusual to me. And I think it has to do with the way that there's so much money flowing in options. And these contracts prove it. Now, this will, another thing that, and honestly, this bothers me to no end. It's got to end. It's got to end poorly. But knowing when and how that ends is the hardest thing in the world. So that's why I think in the end, this is sort of fun, and I like to think about it and talk about it, but you're just so much better off just like, what's the market doing today? Right? I don't have to worry about what the market's going to do on June 1st or April 14th or December 20th of 2026. When that day comes, I'll worry about it then. So it's just, you just look at what the market is doing day by day and just adjust accordingly. Make minor little tweaks. I think you'll be so much better off than trying to interpret, seeing this big picture stuff, which is hard to know when it's going to change. Another sentiment thing, money is flying in, total assets in US listed ETFs. This is another thing I see across the Twitterverse, is all the money in the US. Investors plowed more than 1 trillion into US based exchange traded funds in 24, shattering the previous record set 3 years ago. And this is my favorite thing, raising Wall Street hopes for an even bigger year ahead. So that's this buyers exist at higher prices, sellers exist at lower prices in the market. So when Tesla is 100, 101, 102, 103, 104, it doesn't create more sellers like you would at a normal auction marketplace. In my humble opinion, it creates more buyers. More people want that stock because it's confirmation bias that it's going higher, because their brain has seen it go from 101 to 102, 103, 104, and they just extrapolate to no end. So people are, because the U.S. market's been so good, they're just piling money into it, and that will end. But trying to anticipate when it will is very difficult. All right, so let's go to the industry groups. I just pulled it up just now. It was a little, oops, not the growth 250. And I'm going to turn my camera off so when I go through the stocks to watch. So telecom fiber optics is number 1, and I feel like is like Coherent, Ciena. Which stocks are in? So Ciena, AOI. Let's just pull up Ciena. So Ciena's come out of this long base here. So this is the best group. Security, safety, machinery, metal automation, transportation, airline. Boy, the airlines have been on fire. Telecom infrastructure, that's airlines as a group I would totally miss, unfortunately. Internet network solutions, that's I think Credo is why I definitely I is in that group. I'm fairly certain Credo is in that group. Yeah, and I do own that one. Education, oil and gas royalty, retail home furnishings, utility, electric power, hanging in there still. Food, dairy products. So very eclectic. And I think this is something you should do every week or every month. Just kind of go through the groups just to kind of get a feel for what's going on. I'm going to get this wrong again. Top down, or am I bottom up? I forgot already. Can you believe it? I look at I'd rather say, oh, wow, CRDO, this stock's acting really good. What group is it in? Okay, great. How's the market? Okay, great. That's how I prefer to do it, versus, oh, the market's okay, I should look for stocks. What are the best groups? Internet network solutions. Oh, okay. What stocks are in those groups? Oh, look at their Credo. I think it's easier for me to conceptualize the opposite way from the stocks. All right. So speaking of stocks, we might as well just start with that one. So gaps up on earnings. Look at the last quarter, so strong. The quarter before was very good. The quarter before that was very good. And what I really like is like it undercuts the low and holds, comes down pretty hard, holds, comes down again, holds. So, and from a weekly standpoint, it looks pretty good. I would expect it to make a push through 80 if the market's okay. So this one's very strong. I don't think Core is in this group, but we'll pull this one up. It's in electronic parts. So holding up a little bit better, but it's kind of gotten really sloppy. Like a lot of action here. I don't own this one. I've kind of moved on from this one, honestly. I don't watch it like I used to. Palantir, see how on Thursday, this is, so food for thought. Let me back up to Thursday really quick. And there's no reason to fear a market correction. Like, I don't want it to go down 80% like the financial crisis or the great or the 2000. But 5, 10, 15% corrections are beautiful. They allow you to identify the best merchandise. So crisis equals opportunity is something that a guy that I follow on Twitter, he always tweets that when the market's doing this, I always see his tweet. Such a great reminder. Crisis equals opportunity. I can guarantee you he was down here when the banking crisis was, or I know, was that the banking crisis? I apologize. Maybe it was here, more there. Or was it, see, this is funny how I just kind of forget. But remember when Silicon Valley and all that was in trouble? I feel like it was in March. That's why. But the market's going down, and he tweeted, "Crisis equals opportunity." And I remember thinking, I was bearish. I was short these banks. Some of them that were going away. Like, you'd come in on a Sunday, and one of the banks would be gone. And he was like, "Crisis equals opportunity," and I loved it. It was such a great reminder for me, because look at the opportunity it created, whether it was there or here. I have to admit, I can't remember. COVID, massive crisis. Look at the opportunity it creates. So don't fear a market correction. I'm not saying you want it to go down, but it's going to do what it's going to do. So if it goes down, take advantage of it. Set up, honor your stops, get lighter in the market. You don't have to be completely out, and embrace that opportunity that will exist. So, so the market goes down here. It was that wasn't a very good day, and I could tell you, like, Credo, like, it was blue almost all day. It was blue, and so I'm like, that's what's that stock telling you? So I'm buying that stock on that day. How about Palantir? I was not buying that. I don't own that, but look at that. Doesn't want to go down. This stock has gone from 25 to 80. It should go down, quote unquote, should go down. And on the day when the market's getting hit hard, it's down a total of 44 cents. Crisis equals opportunity in a minor vacuum right here. So when you see that, you want to take note of the stocks that don't want to go down. So here's NVIDIA. It was actually up that day. So the market's going down and NVIDIA is up. So look for those days when the market's getting hard, of the stocks that are high closing range and or even blue. Those are going to be your best merchandise. The market goes down for 5 or 6 days. Look for the stocks that didn't go down in that 5 to 6 day window. Market goes down 5 to 6 weeks. Look for the stocks that didn't want to go down in that 5 to 6 week window. Those are going to be your best merchandise to look for. So I apologize, I got off track here, but Decker's leadership holding up really well. Meta holding up really well. What about like VRT? So these are some of the names I haven't seen, but see how it comes back. So it came down below the 50-day, came back, holding up. VST. Wow. See what I mean? This is a total airball for me. I had that trend line drawn, market's weak, and I should have bought that stock. I should have bought it. Look at it. You can see how it's orange. That went off. What am I doing? That was my alert. Buy that. Up 12 that day. Unbelievable. On the speculative side, you have like Oklo, which was, kind of in that same area, energy, and had a huge day Friday. But look at Thursday, it's blue. This stock, it trades like a bucking bronco. It's very difficult, but look, it's blue on Thursday. I do own this one, FYI. I did talk about Credo. What about like Twilio? Thursday, blue, holding up really well. So these are stocks that, look, I don't know if you can buy them here. I don't think this is the correct type of buys, but they can be held. They don't want to go down if you have them and you hold them. App. So in hindsight, the Thursday action, like the leadership, a basket of leaders, it really outperformed the market on Thursday, which is why I try not to spend too much energy on the indexes because they'll fool me. See, I was fooled by the weakness in the indexes on Thursday when really most of the good stocks held up pretty well. What else is out there in the leadership? So let's look at Tesla. Now, Tesla's a really difficult stock. They had really, this is not great delivery numbers, but then, the market will tell you it's not a car company anymore. I don't know what to make of Tesla. I don't really trade it because I just think it's, somebody on Twitter has a great saying about Tesla. The stock is the product. And it is definitely the case with Tesla. So, I mean, if it's at 500 in 6 weeks, or 306 weeks, I will not be the least bit surprised in any of those prices. I think Tesla can go anywhere. And so that's why it makes it a very difficult stock. Amazon, let's look at some of the FANG stocks. Amazon holding up well. Now, Apple doesn't look good. And guess what? Apple's part of the Dow. But look, doesn't look good. It's still above the 50-day. It's still above the 200-day. Relative strength's getting pretty weak, but this is like this. I'm over exaggerating a little bit. Like, doesn't look good. It's 5 days off of an all-time massive high. So, but I'm a shorter term trader, so that's kind of how my brain is wired to see that as doesn't look good. So take that for what it's worth. So like the FANG index holding up. So I've got these trend lines drawn, and until it breaks below that, it's hard for me to be bearish about the market overall. If this turns out to be a big failed breakout, and like on the monthly, we've got the potential for a massive double top, then that'll change my tune. And then this is levered 3 times. So let's look at like FNGS, which isn't levered. And let's do this. Let's draw an alert there. All right, now I've got kind of much better tell in that regard. Oh, I know what I want to talk about for stocks to watch. So I think sentiment is important. You don't want to put too much into it, but you want to be aware of what people think about indexes and indices and stocks that you either own or wish you owned, or leadership stocks. So on 11/29, I feel like this is a journal article, and apologize to the journal if it wasn't them, but meet the everyday traders riding the furious rally in MicroStrategy. George Bodine's a retired air captain, diehard Bitcoin fan. He bought a stake in MicroStrategy, a modest stake. So it's grown into a 7-figure position. He's 69 years old. Huh. I wonder what a CFP, like his financial planner, would think about that. I'm getting more out of Bitcoin than I could even from the spot Bitcoin market. So that was on 11/29. So that kind of soured me that maybe the move is getting a little bit long in the tooth, a little bit too obvious. And when is 11/29? Right there, 11/29. So stock's about 400, already 100 points off the high. Now, granted, very quickly spent half a minute up there. But this is going to be an interesting story. I'm dying to see how this plays out 12, 18, 24 months from now. Again, a lot like Tesla. This one's very Tesla-like. It could be 1,000 or it could be 50. So it's going to be very interesting to see how it plays out. Now, my instinct is 50 before 1,000, but I reserve the right to be wrong. A lot like Tesla. I always felt like Tesla on a monthly chart, once it broke here, I would have guessed it would have come back here before it ever went and made a new high. So I'd have been wrong on that for sure. Oh, no, I mean, would have been. I was wrong on it for sure. All right, so the quote of the week, and because I was kind of putting this together on a Saturday afternoon, I just decided I wanted to start the new year with, I don't know if I call it a quote, but it's kind of my favorite thought process. I wish I knew where I got this. I can't recall. I did a Google search for this. I know I read it in a book somewhere or something, but courage, patience. Um, I I can't remember if they, their word was vision, and I like the word imagination from my perspective, and execution. This is the key, I think, for me, anyways, for stocks. You have the courage to take the trade. VST. Where was I? I put that trend line alert for a reason. When the trend line goes off, take the trade, Scott. Have the courage to take the trade. Patience. Have the patience to allow the trade to work if it's working. Imagination/vision. Imagination. About 8 out of 10 stocks that I buy, they go so much further than I ever would have believed, both up and down. So when you buy something, imagine like some of these stocks, they have tremendous, tremendous potential. And so you have to kind of imagine how far they can go for you and make a difference to your account. And then last but not least, the most important thing is execution. You got to buy it, you got to sit, you got to sell it right. And that's the hardest part. And you don't have to be perfect. I look at some of these big moves in some of these stocks and just think, if I just got that 65% right on the execution side, what if you got Tesla 35% right on the execution side? The stock has gone from like 10 to 400 or whatever the number is. What's 35% of that? So you don't have to be perfect, but you really have to execute. You got to buy it, you got to hold it, you got to sell it. And so I've got this taped to my monitor and as a reminder. And it's kind of in this steps, right? The step one is courage. I got to take that trade. If I think XYZ is a buy, I got to take that trade. I got to have the courage to put that on, knowing that if I'm wrong, I'll just use that's what the stop is for. Once I'm in it, got to have the patience to allow it to work. You don't want to take 50 cents if the stock's going to go 50 points. I might take 25 points if the stock moves 50 points, but I don't want to take 50 cents out of it. And that's part of that whole imagination of where it can go and then the whole execution. So I love the new year. And one thing about the new year is you get to start from scratch. No matter how great you did last year, it's done. No matter how poorly you might have done last year, it's done. You get to start from scratch and you have so much runway. And I just think it's going to be a banner year. I just think the market's going to be so dynamic in 2025 with tremendous opportunities, maybe both ways. I don't know, but for those of you that aren't interested in the downside, there'll be tremendous, I think, opportunity for those crisis periods, which are probably going to come. I haven't had one of those in a while. They tend to come around every 3 or 4 or 5 years, the smaller ones, and the really big ones tend to come around every 10 or 12 years, unfortunately. So be ready, be able to participate as best you can. Our contact information, 800-831-2525, MarketSurge at investors.com. Have a great week, everyone, and we'll see you later. Bye-bye.